Welcome to this introduction to swing trading. As a beginner, it can be overwhelming to navigate the world of investing. That's where swing trading comes in. It's a strategy that focuses on short-term trades, allowing you to take advantage of market fluctuations without having to constantly monitor your investments. Swing trading is an important concept for beginners to understand because it offers a less stressful and time-consuming approach to trading while still providing opportunities for profit. By learning the basics of swing trading, you can gain the confidence and knowledge needed to make informed investment decisions. Swing trading is a trading strategy that involves holding positions for a few days to a few weeks, with the goal of profiting from short-term price movements. The foundational principles of swing trading include identifying trends, setting entry and exit points, and managing risk. To identify trends, swing traders use technical analysis tools such as moving averages, trend lines, and chart patterns. These tools help them determine whether a stock is in an uptrend or downtrend, and when to enter or exit a trade. Setting entry and exit points is crucial to managing risk and maximizing profits. Swing traders often use stop-loss orders to limit their losses and take profit orders to lock in gains. One of the most important aspects of successful swing trading is the ability to identify trends in the market. Technical analysis tools can help traders do just that. These tools include things like moving averages, trend lines, and chart patterns. Moving averages are a common tool used by swing traders. They help smooth out price data over a period of time, making it easier to identify trends. Traders often use a combination of short-term and long-term moving averages to get a better picture of the market's direction. Trend lines are another useful tool for identifying trends. They are drawn on a chart to connect two or more price points, creating a line that shows the direction of the trend. Traders can use trend lines to determine entry and exit points for their trades. Chart patterns are also important for swing traders. These patterns can provide clues about where the market is headed next. Some common chart patterns include head and shoulders, triangles, and flags. To use these tools effectively, it's important to understand how they work and what signals to look for. Traders should also be aware of potential pitfalls, such as false signals or unreliable data. By mastering technical analysis tools, swing traders can gain a better understanding of the market and make more informed trading decisions. Developing a trading strategy is essential for success in swing trading. Without a clear plan, it's easy to get caught up in emotions and make impulsive decisions that can lead to losses. To develop a trading strategy, start by identifying your goals and risk tolerance. Then, determine your entry and exit points based on technical analysis and market trends. Finally, establish rules for managing risk and stick to them consistently. Effective risk management is crucial for successful swing trading. By minimizing losses and preserving capital, traders can ensure that they have the resources to continue trading and profiting over the long term. One key strategy for managing risk is setting stop-loss orders. These orders automatically trigger a sale if a stock's price drops below a certain point, limiting potential losses. Traders should also diversify their portfolios, spreading their investments across multiple stocks or other assets to reduce the impact of any one loss. In conclusion, swing trading can be a lucrative and exciting way to participate in the financial markets. By following the foundational principles of identifying trends, setting entry and exit points, and managing risk, beginners can develop a successful trading strategy. It's important to remember that swing trading requires discipline, patience, and a willingness to learn from both successes and failures. As you continue to practice and refine your skills, don't be discouraged by setbacks. Instead, use them as opportunities to grow and improve. Thanks for watching. Like and subscribe, and we will catch you on the next one.